taking a look just at a short-term or kind of our traditional time frame chart of SPY. This is a 5-day, 1-minute chart. And this is typically where I start because this gives me both some context and plenty of detail. So I'm not looking at just a single day's chart. I'm not looking at a chart of a very high time frame like an hourly chart, because then I would lose a lot of detail or granularity. The reason we like a lot of detail and granularity when we're launching multi-day VWAPs is we want to know the exact candle from whence we should really start that cumulative measurement, right? That's where we choose to launch a VWAP. It doesn't mean you have to get it down to the right 1-minute candle, but the finer the time frame, the better, in my experience. Also, because we tend to be short or medium-term traders, I'm gonna guess that most people listening to this are probably not trading at the 30 or hourly time frame, 30-minute or hourly time frame. You're probably at the 1-minute, 5-minute, maybe 15-minute. And my kind of goal, as I had said in the intro for today, is we're gonna rotate through a couple chart examples, talking through some of the principles that we didn't get to cover last time, but really just applying these studies on the fly, and you can kind of see my thought process, even with some charts that I haven't glanced at before or haven't done a ton of prep work for. I did that on purpose because I wanted you to see me iterate through different attempts at finding the kind of controlling VWAP or the main VWAP on a chart that we should be using going forward. Obviously, it is kind of a challenge because we don't start out knowing exactly where to launch a multi-day VWAP. But what you guys are going to probably notice is that I have like a set of the usual suspects, as I call them, starting points that might likely make sense on any chart that we're examining. So you probably heard me say this before, yesterday's volume weighted average price, meaning whatever day prior to the one we're currently on. That's a good starting point because we want to know, is the new or current day its own scenario, or is what's happening today happening in the context of some major event from the prior day? I kind of describe this to people as if you've ever had a fight with your significant other and then kind of gone to bed, you're still mad at each other, but you wake up the next morning and it's not like either of you have forgotten what happened on that prior day. Maybe it's a little less intense, you're maybe less mad, you've had some time to think about it, but nobody forgot what happened on that prior day. There's still a dominant event that's kind of hanging over your interactions with this other person, right? A multi-day VWAP, specifically yesterday's VWAP, is kind of a visualization of that. It's showing how the major event from the prior day and the current day's trading kind of work together to produce some, I don't want to call it hybrid, but some mix between the two, right? If you had a fight on Monday, you go to bed and you wake up Tuesday, you're still upset. You're just slightly less upset, or you've augmented how upset you are because you've got a whole new day to process that information. So on something like SPY today, obviously a pretty big rip out of the open, looking at, ooh, what a strong move in those first 20 or 30 minutes. Very challenging, I think, for us as VWAP traders to try to participate in, because the only real opportunity we probably would have had is this tiny little flag that breaks higher above the deviation band. I'm not even going to zoom in and talk about this like an intraday trade because I'm not really trying to encourage traders to attack that first 30 minutes. But I do recognize that getting up into the fast lane, strong slope, and kind of a traditional technical pattern might have led to another trade up and off that deviation band. Let's actually zoom in just a little bit, clear this. Yeah, it does offer a little bit of support. Little bit of support, little bit of support, little bit of support. And eventually when this cracks and falls back in our transition from the fast lane down into the slow lane, you can actually see the kind of character of the market change. We've had this strong up move that gives way as soon as we violate that deviation band. So common intraday principles, we've seen this all before, right? Some support at the volume weighted average price, cracks below, and then this is really what I wanted to talk about, this kind of unique, oddly placed low. It gets into the fast lane, but doesn't really trend lower. And when it comes back up to the -1 deviation band, it doesn't sell off and continue its motion to the downside, right? It actually reverts back up into the slow lane, goes effectively sideways, and then boom, nice support at the -1 deviation band before a small reversion or small bullish move up to the +1 deviation band. The takeaway in my mind from an intraday, last little thing I'll say intraday, then we'll get to the multi-day stuff. The takeaway that I have is there are these certain breaking points, like the cross of the deviation band, the failure to stay in the fast lane. If we kind of ignore this first move up and this little brief outlier to the downside, wouldn't you argue, or agree, I should say, wouldn't you make this argument for me, guys? This entire blue section I've drawn is basically sideways VWAP movement. No slope, not much attempt at breaking out of the deviation bands in either direction. So very calm, very contained. As far as multi-day goes, with respect to this important low, we're going to start, and I'm cheating here because I already know the answer. We're going to start with what we just described, yesterday's volume weighted average price as our initial kind of usual suspect. I'm going to use that term quite a bit, right? We're going to launch a prior day's volume weighted average price, and we're going to do that by going to our edit studies and applying the date VWAP study. I've already set it up a little bit, but I've changed from the raw date input method to days ago, and I've set it to 1 day ago. So obviously launching from the prior trading day. One other setting I've changed in here just to explain is I've changed VWAP signal to no. What that means is instead of being red and green color changing, whether we're above it, that would intimate support, so that would make the VWAP green, or if we're below it, which would intimate resistance, would make it red. VWAP signal set to no means you've got a monochromatic VWAP. So when I apply this, instead of it being more red-green, whoops, I did. Every time I have to check show study. I had hidden that previously, but what you'll see here is a bit confusing at first because now we're applying VWAPs on top of VWAPs. But what we can do is we can go hide the intraday study. Here we go. And the interesting thing about this is that while we have a normal intraday VWAP for the first day, as we kind of expect, right? Again, we're just launching a VWAP at the outset of the day, running it forward for the entirety of the trading day. That's a normal intraday VWAP. Our multi-day VWAP study continues onward, calculating, well, what would be reasonable in the context of both days added together. All of the volume, all of the price action. You know, it's an easy way of accumulating a lot of information without having to mentally kind of add it together. We're letting the study do that accumulation. What's neat about this is not only do we observe right at the outset of the day a nice little tip off of support, not that that would have been our trade signal, but just another additional kind of bit of evidence that we were holding support here, same as at the end of the day relative to our intraday VWAP. But look at how the market respects or responds to the rising 1 deviation band. So we're kind of treating this as though this is all one big trading day. And based off those principles, wouldn't we agree that up here is the effective fast lane, and then down in here is the effective slow lane? Look at the attempt we had to hold support and stay up in the fast lane from that multi-day VWAP. These are the same principles as intraday VWAP, right? We're still using fast lane, slow lane, deviation band, slope. It's everything we talked about during the first week, but now extrapolated to a slightly bigger volume weighted average price. Now, as we come back down to kind of conspicuous low on the day, notice it's not always going to respect the VWAP within pennies. We're talking about a multi-day VWAP, we're talking about a $300-something ETF. There's going to be some fluctuation or some tolerance required. What I often remind traders is if you've been above the VWAP and you come down to the VWAP and for maybe 5 minutes spend time under the VWAP, that does not invalidate all of the activity we've seen up and above the VWAP. This is more likely an outlier that we will get confirmation of if it's actually changing trend, if it's actually breaking below the VWAP. Well, what we would expect is we'd expect probably more of a move down, perhaps a weak attempt to breach VWAP that fails. And that would be the kind of confirmation for a move downward that we would have been expecting. But instead, we breached the VWAP, snapped right back above it. And so minutes after breaking below that VWAP, someone in here was willing to gobble up some shares. So effective support at a rising multi-day VWAP, and then later in the day, I think it was the trade news that came out, or the trade rumors, or whatever you want to call it, found some, again, decent support where we would expect at the prior day's volume weighted average price, kind of condensed or continued on into today. A little bit of Dev band resistance, but nothing that we would trade on, just showing more respect to this volume weighted average price in this Dev band set. Would you take a trade anywhere on that SPY chart particularly? I think I might have been tempted, I'm going to be honest, even though it's a failed trade, I might have been tempted to go long at that deviation band rally because that looks like a type 2 multi-day trade. We quickly would have known that that would not have been a valid trade because think about it, we make a lower high and then immediately smash back down to the Dev band where we find no support. So in my mind, that would have been an opportunity, but it wouldn't have developed or continued into a winning trade. Having seen the speed with which we ramped back up above the volume weighted average price, I do think there's a structurable trade here going along just above the volume weighted average price with a stop below, or structured as I call it, against that prior recent low that occurred near the VWAP. I think later in the day that probably moved because that was all trade rumors, right? That moved probably too fast for us to participate in it. However, yeah, I think the two opportunities I would have seen is the first one, type 2 long, and then the second one, a type 1 long. The type 2 long would not have worked, though our risk management would have gotten us out around break even, maybe a small profit even. And then the second trade, yeah, I don't know how long I would have held it. I got to be honest, seeing it pop up to about 2/3 of the way to target, maybe a little more than halfway to target, and then retreat, I don't know. I might have been spooked out by that, just being honest about my mental fortitude for holding a multi-day VWAP into the second half of the day. Because if we hadn't known that there was going to be some trade discussion, this could have gone absolutely sideways. This could have been a no wind kind of day, to use that sailing analogy, right? If there's no wind, it doesn't really matter how good of a sailor you are. There's just not the kind of conducive opportunity that you're looking for. Interesting. Okay, so I'm just, this was not part of my plan, but I am going to take a stab at this real fast. I'm curious how the market reacted from not only that SPY major low, so we're just going to go in and apply, we actually don't have to worry about which date method we're going to use because we're just applying the highest high and lowest low VWAP. So what that's going to do is obviously launch automatically from the low and from the high two disparate VWAPs for us. There we go. Ooh. Oh, this is interesting. Okay, so here we go. I'm going to zoom in so we can see the launch points a little cleaner. So I'm observing, obviously in the moment, strong gap down, bit of a recovery, back up into prior range. This definitely looks like a potential or a candidate for a low day. So launching a low VWAP around here in the moment wouldn't have been the hardest thing to do. However, it's common that one day after a low is when we can really identify the market did not progress lower. In fact, it reversed, and therefore that's a good candidate for a low launch point. What I was remarking on is the kind of resistance and support that we observe multiple times. Oh, wow, look at that. I mean, even up in here, and then last one. Now, multiple times, this additional deviation band would have given us a clue as to whether the market is contained and stuck within that slow lane, or if it's continuing to try to go higher up in the fast lane. I don't think we would have been fooled necessarily into thinking that that was a relaunch or a type 2 continuation trade, because look at how weakly it bounced off of that and then quickly at the end of the day kind of got underneath that support. So we transitioned from being up in the fast lane for several days to being stuck more sideways in the slow lane. And then yet again, as soon as we get up in the fast lane, the character changes and we're now seeing support rather than the resistance we observed over Tuesday and Wednesday's trading. I want everyone to notice, I didn't do a ton of work here to achieve this VWAP, right? I literally just told the study, go find the highest high and lowest low launch point for me as a reference point, something against which I can gauge how strongly or weakly the market is moving on a multi-day basis. The analogy here would be if you've been using a short term, like a 20 moving average, and then you say to yourself, well, maybe I should look at the 200, right? Maybe I should have some context for where we've been trading over more than one day. And then, yeah, this high VWAP, meaning the VWAP launched from the high of the current day. You know what I'm going to do actually, just to keep this extra clean rather than go, I'm going to set this to high VWAP from 0 days ago. So notice I've got it set to days ago already. I've selected that I only want to launch the VWAP from the highs, and we're telling it from the current day. It makes for a slightly cleaner chart. We'll go back to a shorter time frame. Interesting. Okay. So observe that on this rally up off the volume weighted average price, where did we stop? We stopped right at the VWAP down from the highs. You may remember me saying something like this during our intraday week last week, but VWAPs define trends. If a market cannot breach meaningfully beyond a trending VWAP, that is reasserting its trend status, right? A market that can't get above the volume weighted average price launched from the highs has no real hope of making it to new highs. Wouldn't you agree? If it can't breach those prior highs or the average price from prior highs, what hope do we have of making it to a brand new high unto itself? And actually, I'm going to do one more thing. We're going to try and hide this intraday VWAP just to be able to focus on one VWAP at a time. Doesn't this behavior look pretty familiar? Meaning, if we were to just assume and kind of launch a VWAP from this high, we were saying this is the start of the day. Rejection at the VWAP, nice type 1 short. Strong move down in the fast lane. And then as it gets into the slow lane, bit of support, bit of support, bit of support. Wouldn't you guys agree that it's visible, the change in character from a market that is in the fast lane to one that is in the slow lane? You can literally see the candles are much smaller, much more sideways movement. And then later it goes through a bit of, let me clear this, make it clear too, a bit of containment, almost like a triangle or flag before starting to break higher. We ran out of time at the end of the day, so it didn't continue significantly higher. But what I'm getting at is, don't these macro and micro VWAPs, bigger than an intraday VWAP, that's macro, smaller than an intraday VWAP, that'd be micro, these are still VWAPs, right? The analogy I'd used before, if someone taught you how to do math and then you started doing math with fractions instead of whole numbers, or you started doing math on really big numbers instead of normal integers, yeah, you're still doing math. You're still using the same principles and rules, just at a different scale. And so that's what we're observing here, that the same stuff matters. QCOM was one that I had on my list as another interesting multi-day kind of launch point here. So we have the same principle as before, kind of with our SPY chart, light run up, and then as it blasts off and pulls back pretty aggressively, not only do we have the same beautiful intraday picture, look at that rejection up at the +1 deviation band. That was telling us that if we were still long, it's not a great time to be betting on continuation to the upside. We're actually more likely to experience a reversion back down to VWAP. And we did. And then some, actually. It then got below VWAP and had a nice type 1 short further down to this prior, or I shouldn't say this prior, down to this low. We're going to apply the same prior days VWAP concept here. We're going to go back, change it from days ago. We already have that. Set it to date time, and we're setting it to 1 day ago. What we're going to observe is a continuation of this prior day's VWAP that offers support very cleanly for us. I've just hand drawn that in, but let's go ahead and click apply now. Ooh. Now that's the kind of pristine rally off of the prior day's VWAP that I think everyone is mentally looking for. The most, I would argue, the most conspicuous kind of trade setup that I know to go back to the prior day's VWAP on is when we make a strong move up and away from what would have been the prior intraday VWAP and then rapidly retreat towards it. So I think, I can't remember if it was in the last strategy session or if in the prior week's Q&A, someone had asked me, you know, do you want something that is pulling back aggressively to a rising VWAP, or do you want something that is coming back and kind of consolidating or basing before the potential of a move higher? And I would argue that a sharp reversal tends to be best because that gives limited time opportunity for institutional traders to really participate at this decent price. It's not going to be so easy, so predictable as to pull back to average price, sit there cleanly for an hour while everybody fills up their buckets full of stock before a move higher. Consolidation tends to lead, at least with VWAP, into a transition to the other side rather than continuation. A sharp move up and off of it is a signal. I can't say I saw this one coming entirely, but this meaning the magnitude of move. I knew it was going to rally up and off the VWAP. I didn't think we'd get past the intraday VWAP. This was my target here. Just glancing at this for a second, let me pull back to a 20-day 5-minute. Let me try and throw on, I'm going to explore this chart a little bit, so I'm not sure if these are going to be valid VWAPs or not, but we are going to launch them to start examining. So we just looked at the prior day's VWAP, and that was the kind of pullback we had just seen right around here at the day's effective low. I'm curious to know, and again, just glancing at this chart, I'd want to know about this day where the high occurred, and obviously this day where the low occurred. Notice it's not like I'm always just going back to the high and the low of the available chart. Those are just pretty common starting points, given that major things tend to happen at sort of local swing highs or swing lows, whether that's a fundamental event or just some technical event. That ends up being our launch point. So let's do our starting routine here. We're going to turn on the highest high, lowest low setting. Take a moment to observe. Here's what's interesting about applying the high-low specifically. So I just turned off intraday VWAP again to kind of give us a cleaner view. With this exception, we really, for many days from the start of the VWAP all the way through this big sell-off, we really couldn't get above VWAP. In fact, we could barely stay out of the fast lane. Take a look at this. Rejection at the DEV band, rejection at the DEV band. It tries to break upwards and through to start a bit of a reversion here, but it fails. Resistance at the DEV band, resistance at the DEV band, resistance at the DEV band. Look at this. I'm going to get sick of saying this, but we are in the fast lane all the way down. So this would have kept you in that swing short trade had you been observing a VWAP down from what was obviously big gap up and then immediate reversal, some sort of a local high. Not quite as clean a picture for the VWAP up and off of the lows. However, notice that we never really challenge that intraday, excuse me. We never really challenge that VWAP again. We don't get back to the VWAP. We're not even getting back to the VWAP. So what does that kind of tell you? I think that tells you that the market is obviously a little stronger than this VWAP up and off the lows necessarily describes it. So what we're going to do is we're going to try and calibrate for lack of a better word, the VWAP that we're going to be utilizing to these pullback points that the market obviously in retrospect used as an important low. And the way we're going to do that is we're going to go back into the study, clear the drawings. We're going to go back into the study, and instead of using the highest high and lowest low, we're going to launch it from a number of days ago. So we're going to count 1 day ago, 2 days ago, 3 days ago, 4, 5, 6. We've already launched a VWAP from 7 days ago. So let's try one from 6 days ago. What I'm doing here is I'm observing that if we launched the VWAP at the actual low, it doesn't quite intersect with these. So we're estimating, well, what about starting a VWAP on the next available day, which would make the VWAP a little bit higher, right? It would make it more responsive to the changes in price. It'd probably fit better to price action. And notice what we're doing here is we're not trying to curve fit. We're not necessarily trying to go back in time and act like we would have known. No, that's all absurd. It's not what we're trying to do. What we're doing is we're trying to, the analogy my brain has given me is to figure out the unlock code for this padlock, or this combination lock. We're trying to figure out the controlling VWAP that would have explained prior activity so that we can get a better read when that changes, when we shift out of the fast lane from the controlling VWAP or something to that effect. Let's do this. We're going to clear these drawings. We're going to launch a VWAP from 6 days ago. Okay, we're getting closer, right? This does intersect the pullback and almost there. But what I'm going to try and do, and this is just to show you guys a little how to use the study. I'm not saying this is critically important. We're going to go in and change it from date time, which launches it at the start of X number of days ago. We're going to change it to low VWAP, still set to 6 days ago. This study will then look back 6 days and launch from the lowest point. Actually, I caught myself before I did this. The low of day I can actually see down here, right where my cursor is the start of the day. So we're probably not going to see a very different VWAP than what we've plotted here. What I'm going to need to do is I'm going to go in and actually grab the low that I was referring to, this kind of swing low. So it's 11:55 on December 4th. So now we're going to go, oops. Okay, so notice I've typed in the start time and start date, and I've made sure to set it to a rigid date launch point and made sure that it is date time, meaning we have manual control over where we launch this VWAP from. Ooh, I think we found it, guys. I think we figured out which VWAP is working here. Notice the clue that I have is not only pristine respect on that one major pullback, you can actually observe it does look like the market is responding to that deviation band as well. It's not going to be a massive clue, but that is a tip-off that you're dealing with a VWAP that is being respected by that market, if it fits not only to the VWAP, but also to the deviation bands. You're not always going to find the perfect VWAP, but the process is really what matters, that we go through iterating and checking the kind of, here's that phrase again, usual suspects to figure out if there are any obvious or quick answers to what is the controlling VWAP, what is the dominant day from which we should be launching a VWAP. Sure. So one of the VWAPs I had described before that is available within this date time study or date VWAP study is something called the adaptive VWAP. So adaptive VWAP fits to fill the entire visible chart. No matter how big your chart is, it will always start a VWAP on the leftmost day, and it will always end on the rightmost day, hence the name adaptive. You can think about it like a gas. It expands to fill whatever space you put it in. Adaptive VWAP is useful for when you're rotating through chart lengths or time frames, and you want a consistent VWAP that will always kind of fit to whatever you're examining. So if you're someone who likes to look at a 5-day chart, a 20-day chart, a 90-day chart, kind of gauge different timeframes, adaptive VWAP might be the fastest and easiest, most broadly applicable one for you. Applying days ago, this methodology, right, where we count the number of days backwards from which we want to launch a VWAP, that's most useful for short-term swing traders or intraday traders. Quick, recent, rolling number of days ago, right? So if somebody says, hey, show me the VWAP over the last 3 days, the way in which they've even verbalized that statement tells you that we're going to be using days ago. I tend to use days ago quite a bit just because it's faster to call VWAPs into action than the next one, which is date VWAP, or the raw date input itself. I found that that's most useful when I already absolutely know the date or time from whence I want to launch a VWAP. That tends to be more outside of 20 or 30 days, some big historical, the election in 2016, or some major trade news or geopolitical event or earnings for a stock, right? Those are main anchored points that aren't going to change. High-low VWAP, so all these options, high-low, high VWAP, low VWAP, and HHLL, those are a little more situational because they only relate to the price extremes on a given day. But if you remember last time when we talked about this idea of trying to create for ourselves, I'm just drawing randomly here, this has nothing to do with the chart, some kind of macro resistance level for us, and actually should not have drawn it in that color. How about this? Some macro resistance for us and macro support. And that's our job with high and low VWAP. We're intentionally launching from price extremes to give us the most price extreme, no pun intended, VWAP that we can have in terms of either resistance or support. We're trying to draw those macro boundaries or detect where they are. And then finally, event VWAP. So you may recall that's a separate study, but that's where the user doesn't have any real control over what date the VWAPs are launched from. You're simply picking a theme or a type to go with, right? So like earnings launch point, options expiry, gaps surpassing a user-defined threshold, meaning you had set it and say, show me a VWAP from every gap greater than 2.5% or something like that, right? So that's adaptive, days ago, date VWAP, high-low, and event VWAP. Those are the 5 that we kind of covered. So like we said during the strategy session, major geopolitical events, technical breakouts or breakdowns, gaps, fulfillment or breaking of a traditional technical pattern, like a flag, head and shoulders, critical support, absolutely. Economic or fundamental data, stock specific, sector specific, or macroeconomic, right? So if that company releases earnings, if that company announces a new product line, that'd be stock specific, right? Sector specific, obviously, if you're trading the metals sector and there's, I don't know, some industry or economic report or some, I'm making this up, you can tell I don't trade the metals sector, but something that applies to the entire sector, that's sector specific. And then obviously broad market would be maybe a Trump tweet, tariff news, geopolitical conflict, right? These kind of, applicable to any stock. When the VWAP is being actively disrespected or ignored, and when we have a new, obviously dominant VWAP to watch, the market does tend to move from one VWAP to another. And I don't literally mean from that VWAP level to the next VWAP level. I mean, it moves from like a sphere of influence, from perhaps this volume weighted average price is our controlling environment right now. But if we were to reverse sharply and start pulling back, we might want to launch a new VWAP from that critical turning point, that obvious technical turning point.